So let's talk about the economic report that was just released this morning. What's going on, team? It's Ricky here with Technical Solutions, here to provide for you a super quick stock market update on why the market is reacting the way that it is. Let me go ahead and start sharing my screen. And it was actually the economic report that was released 1 hour before the market opened, and that is initial claims and continuing claims. At 8:30 a.m. Eastern Time, we had initial claims and continuing claims being reported. What this is the people filing for unemployment for the first time. That is initial claims. This is a weekly economic report, almost every Thursday, 1 hour before the market opens. Then we have continuing claims. People that continue to file for unemployment checks week after week, right? And this one, again, never has an expectation, but it's just a reporting on how many people continue to file for those continuing claims or for those continuous unemployment checks. The expectation was 194K. The prior month was the prior week was 183K, and we reported 196K. That was actually not bad news. So when you're asking the question of why did the market open up in the green, remember, right now, bad news is good news and good news is bad news, especially with the unemployment report that we had last week where the unemployment rate came in at 3.4%, but the expectation was 3.6%. And then we looked at payrolls for the past month and it was more than double than what was expected. Remember, Jerome Powell said, hey, if we continue to have a strong labor market and inflation doesn't continue to go down, then this will only support the case that we will raise interest rates even more. By this unemployment report coming in higher than expected, all this means is that more people filed for unemployment than what was expected. The expectation was 194,000 people would file for unemployment checks for the first time as of last week, but it was 196,000. So literally just 2,000 more people than what was expected. It's not anything too significant, but based off of what we saw last week, right, and the reports that were released, this at least shows that there is some form of slowdown, or at least we're not continuing that same rate of decline of unemployment, right, or of employment, meaning that we want to see a good balance. I know that it's considered to be obviously healthy that the people that are looking for jobs can get a job, and it might be a very weird way to kind of like digest that report, because you might be asking, well, how does people losing their jobs and or not having a job, how is that good for the market? And it's just because of what the Federal Reserve's goals are. And the goal is for the Federal Reserve to slow down the economy because inflation is so high, right? From 9.1% down to 6.5%. And if inflation doesn't continue to drop month over month, then this will only mean that the Federal Reserve can be more aggressive, and they will only support in being more aggressive with future interest rate hikes if they also see a strong labor market, right? The analogy that I gave yesterday is, let's say that, you and your, guy friend are people that like mess around with one another, as in like you guys are rough with one another. If he's like a bigger guy, you're more likely to be more rough because he can tolerate and sustain, if you punch him or something like that, right? The same thing with our economy, right? You can see that the economy is doing well. Job growth is better than expected. And if we continue to see that job growth continues to be better than expected, then obviously if they want to lower inflation and they want to be more aggressive because the economy is strong, then they can tolerate more. I know that might be like a sideways analogy that might not make sense to everyone, but the stronger the economy seems to be, the more aggressive the Federal Reserve can justify it to be. I think that's the best way that I can put it for you guys. So that's what caused the initial, rally. We peaked at $26 a share. But one of the things that I do want to remind you is that on NASDAQ, on the 1 hour time frame, you could even see it on the 4 hour time frame, we are very overbought. And I think this is kind of the struggle that we are seeing, right? Next week, we have the CPI data report on the 14th, and this is 1 hour before the market opens. We're very overbought. We're very overextended. And if this CPI data report, right, I'm saying this now, if this CPI data report does not come in lower than expected, I hope that you are ready for a significant drop, right? I mean, there's no other way to sugarcoat it. As of right now, we haven't made much progress all week. We hit highs of 314 on NASDAQ, on QQQ, right? And we've been consolidating here. So one of the focuses that we have within our Learn Plan Profit Group is that if there is no signs of continuous progress, why are you still in an open position going long, right? And or why do you still carry an aggressive position going long? This is going to make sense to some of you. This is not going to make sense to others. It just depends on how experienced you are. If you're part of my LPP team, you know exactly what I'm talking about. If there's no more continuous progress and we're this overbought, then again, any open position is a position that's open to risk. And this is where reducing your position size and or locking in profits to stay in cash for direction to be, waiting for direction to be more clear is where it pays to be patient. But only time will tell. As of right now, it looks like we're pretty much giving back everything it is that we gained, and we're going back to retest that same support. So we'll see if we actually hold above that support once again. If we don't, right, then we're heading right back down to this moving average, which is going to be right around 300. And if we lose $5 per share, that's going to be another 1.25% for QQQ, which means we'll lose another, what is that, like 4.5% for TQQQ. So just know that we do have some downside, but overall, what I'm looking at is I'm paying attention to the 1 hour time frame to making sure that we still continue to hold above that moving average. And I'm also paying attention to any economic reports and how the market reacts, just making sure that I understand the market sentiment. But again, as of right now, we're taking it day by day because of how overbought the market is based off of the January rally and this up and coming inflation report known as the CPI data report that's going to be released next week on February 14th. So if you have any questions about that, you guys know exactly where to reach out to me. That's going to be via Discord or via Instagram, and that's the first or third link down below. I do have a position that I'm going to be opening and adding more to if we begin to see indication of a reversal, right? Patterns tend to repeat themselves. They don't always have to. I'll keep you guys up to date in our trade ideas section for LPP. Again, friendly reminder, I trade with one team and one team only, and that's my Learn Plan Profit group. They got to see me trade live this morning. They get to see me trade live every single day. They get access to our A to Z video lesson library, our private group chat, daily live trading sections, and access to the TechBuds HQ. It's a one-time payment, lifetime access, and yes, it is exclusive only for our LPP team. I offer nothing else. So if you want to work with me, if you like the way that I break things down, if you want to watch me trade live, no, it's not for free. I offer one thing and one thing only, and that's Learn Plan Profit 2.0. It's a one-time payment, lifetime access, and we're running our biggest sell. So if you've ever wanted to join, that's going to be that second link in the description down below. I appreciate your time. Also, don't forget, I'm using the Webull trading application. It's free for everyone in the US, and you can use the fifth link in the description down below. And if you use my link and deposit $1, you can earn up to 12 free shares, and I earn 1 free share. So it's a win-win for both of us. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.